In this video we will talk about the Upstart holdings, and first of all I think it is a little bit a risky company, because if you will think a little bit better about what actually they're doing, I think you will understand that they can be replaced very easy, and I think that is why you don't want to hold it more than for 5% of your portfolio in this specific stock. Upstart is an AI lending platform partnering with banks to improve access to affordable credit. 70% of loans instantly approved and fully automated. And it is awesome because banks can cut their spendings on their stuff, because I think Upstart will be cheaper. This company GAAP net income profitable, and it is awesome because in this stage of market people don't like unprofitable companies. Highly automated, all digital experience, and here you can see total addressable market, personal $96 billion after $727 billion, and mortgage $4.6 trillion, plus some small businesses, and totally we have $6 trillion annual loan origination. Key financial highlights: revenue $849 million in 2021 and $233 million in 2020. It is quite awesome jump, up 264% year over year, and it is awesome, but we need a number for 2022 to make a prediction, and we will see it after some slides. Expect 1.5 billion in fiscal year 2022 after financing volume, and net income $135 million, and I think I really like this transaction volume, $4 billion. And here you can see outlook for 2022, approximately $1.4 billion in revenue, and now we need to just divide $1.4 billion on 800 with something, and we will get revenue growth rate 65% year over year, and with these numbers it is quite interesting. But first of all, I would like to compare it a little bit with a Visa, and you can see that gross margin 80% and profit margin 50%. In tier, in Upstart holdings, we can expect something like this, or maybe a little bit lower, but anyway, now they have gross margin 85% and profit margin 16%, and I really like when profit margin close to 20%, because it means that they have some competitive advantage. It is quite fresh company, that is why we don't have a lot of data on it, but anyway, average price to sales 16, price to sales right now 5.6. With price to sales 6 and CAGR 65%, we can see this beautiful green line, and I think it is close to fair value of this stock. At the end of this year I can expect maybe $100, but if they will be able to save this awesome 65% CAGR, in the end of 2023 we can expect $165, and it is double in 2 years. As a homework, I suggest you to analyze who actually paid to Upstart Holdings the main amount of money, because if it is maybe several banks or one bank, it is not really cool, but if it is a diversified portfolio, it is definitely awesome. Write down what you will find in the comment section down below.